Hi there, I'm Ross Woodfield. Welcome to Blackwell Global's daily market update. First up today is oil, which has once again seen a solid fall. Crude fell over 5% to close at $45.72 a barrel, as it looks like the glut of supply will continue for some time. The market is also worried about demand in China and Europe and falling off as economic growth slows. We've seen some of the big banks cut their forecasts to $40 a barrel, which I believe is likely given the fundamental situation. Certainly the days of $100 a barrel look to be long gone. Moving on now to the US dollar index, and it opened the week strongly after the fall late last week. The underlying fundamentals point to a strong US dollar, especially on the back of an impressive non-farm result last week and cheaper energy prices, which will bolster growth. There is some uncertainty over when the Fed will raise interest rates, but the signals from Europe point to further easing over there, which will be bullish for the dollar. Now, one piece of news to watch for overnight is the JOLTS job openings report, which could back up the positive non-farm result and strengthen the US dollar further. And looking now at the pound, and it was volatile but managed to find support late in the day ahead of inflation figures due out later today. The consensus is for CPI to fall from 1% to 0.7% year on year, which is outside of the bank's target 1 to 3%. I think 0.7% may be a bit of a stretch considering inflation was at 1.3% just 2 months ago. Perhaps the market agrees, which would explain the recent support for the pound. The inflation figures will be very important and will shape the actions of the Bank of England in the months to come, so expect some big volatility in the pound on the back of the news. That's all we have time for today. For Blackwell Global, I'm Ross Woodfield. Thanks for watching.